Hello and welcome to BQ Prime. I'm Hiral Dadia. One company that is in focus is Castrol India on the back of the first quarter 23 numbers. Sandeep Sangwan, Managing Director at Castrol India, joins in. Sandeep, good morning and welcome to the show.
Thanks, Hiral. Thanks for having me on your channel.
Always a pleasure. Sandeep, my first question coming to you is, though we've seen a decline on a year-on-year basis, but if we see on a sequential basis, there has been an improvement that has come in there. Overall, have the numbers met your internal expectations?
Yeah, absolutely. I think you have to look at the numbers in context of what happened last year. And last year was a story of almost two halves. While the first quarter was very good last year, and we're comparing with that versus previous year, that was the second highest quarter in Castrol. And somewhere in March, we started seeing the inflationary pressures. The crude oil prices started going up. Our input costs went up. Additives, which is a key component of our products, and forex. So I think for the rest 9 months of the year, there were huge inflationary pressures, cost pressures, forex pressures, and we were balancing our margins and volume. We had to take pricing interventions. So as a result, I think as we enter this year, the impact of those pressures is coming through in the results. But if I look at versus sequential quarter last year, deflation has already started. So we've seen costs coming down, and I think from that perspective, we're seeing good momentum coming back in quarter one. So if, as you rightly said, from a quarter one last year perspective, our revenue is up 10% and our PBT is up almost 16%. So I'm very hopeful of the rest of the year in terms of with the deflation starting through. And we're also making strategic progress on like service and maintenance. We have 300 Castrol Auto Services. We have 5,000 bike points, and we're increasing those day by day. So very good progress on service and maintenance. We're getting into execution on our investment in key mobility. And the good news is that in first quarter, we also relaunched our brand with a refreshed identity, which is more contemporary, more modern, and serving needs of customers and consumers for the future. So I think all in all, while the results may look subdued versus previous year, I'm very positive on the outlook for rest of the year.
Right. So overall, as you mentioned, that the input cost pressure is something which is now easing. Now, what's the kind of impact are we seeing with lower crude prices? That's my first question.
Yeah. So I think we always look at giving good value to our customers and consumers, and with the pressures easing down a bit, we also passed on some of those cost savings to our customers and consumers, so that the prices become far more in line with where we expect them to be. Castrol is still a premium brand, will always be a premium brand, and will be premium to the market because we deliver quality and value to our consumers and customers. But I think we can play that balancing game much better now with the cost pressures easing out.
Right. So by how much, what are the kind of benefits we could see in terms of, the current calendar year? Because clearly base oil and additives are derivatives of crude. Yeah. Now with crude coming to in that range of $70 to $75 a barrel, what's the benefit we are expected to see?
So I think I won't be able to quote any specific numbers. We have a pricing strategy. We have a strategic pricing framework with which we play. And we try and operate within certain bands of premiums that consumers or customers are willing to pay for quality products, and we always keep that in mind. So I think with things stabilizing now, we should see good momentum. To give very specific numbers, because the market is still very volatile. Okay, and the geopolitical situation globally is not eased, and that will continue having its impact on the environment.
Right. And in terms of the forex fluctuations, what's the kind of hedge book that we maintain?
So typically right now, forex is around 81.90, 81.70, and I think we do hedge a few months forward. Okay. What is our hedge rate, that I won't be able to share, but I think we expect the forex to be in the range of about 82 rupees going forward for the next 3 to 6 months.
Right. Apart from that, we've expanded our presence in service and maintenance as well, right? Yeah. So we have around 300 Castrol Auto Service outlets and almost around 5,000 Castrol bike points across India. Now, if you have to see in terms of the service business versus the absolute product business, what is that kind of revenue breakup expected to look like?
So, see, our primary revenue is still product based because we sell product into these workshops.
Hmm.
These are Castrol branded Castrol Auto Service or Castrol bike points so that consumers can get a trusted quality of service rather than service revenue. So I think our focus is to making sure consumers have a place where they can go to, where they can get trusted products, genuine products, and very good quality of service. That's the intention, rather than kind of saying, okay, so much of my revenue comes from service. But I think in future, as we go along, there may be opportunities to start adding service revenues also.
Right. Apart from that, if you see in terms of the industries, multiple industries which Castrol services, right, from aerospace to automotive to oil and gas, power, where are you seeing traction right now? And which are the segments and industries where you are seeing a lull?
So I think if I look at breakup of our business, a large part of our business is from automotive.
Right.
And I think we're seeing very good traction in personal mobility, which is passenger cars, which is a category, given the low penetration in India, which is growing very healthily. I think agri and commercial vehicles have made a comeback. I think we're seeing very good, strong growth in commercial vehicles and agricultural sector. I think two-wheelers is an area which is still kind of slightly soft. I wouldn't say it's not growing. It's a bit softer if I compare it to cars. I think so. Overall, automotive sector seems to be doing very well for us. Okay, industrial is still a bit softer because of the price increases that we had to take last year. But I think as we go forward, we'll see also some momentum coming back in these sectors also.
Right. For a product like yours, the biggest competition is the unorganized market, right? Specifically from a price point perspective. How are we dealing with that? And how is the market share improving?
So I think we've been able to improve our share in, for example, in some of the spaces like cars, agricultural sector. Okay, you're right. There's a large part of the market which is unorganized, commoditized, but we don't play in that market. I think we cater to consumers and customers looking for quality and quality products to protect their assets. Because if you look at it from an Indian consumer mindset, it's a huge investment in cars or two-wheelers a consumer makes. Okay, it's an important asset for them, and we help them by protecting those assets by giving quality products. I think that's where our focus area is, and we continue investing behind our brand. For example, we've tied up with Jio Cinemas for IPL as an associate sponsor, so you see a lot of kind of advertising and what benefits our products deliver during the IPL phase also. So we will continue investing in our brand. We'll continue working with the mechanic community where we do a lot of work. We'll continue working with the truck drivers as part of our engagement initiative. So we'll continue doing those things to make sure that our customers and consumers are getting quality products rather than playing on price, which is not the intent that we have.
Right. So from here on, what's going to be the strategy overall in terms of growth? And two, what are we looking at in terms of 24?
So I think, let me clarify. First of all, our financial year is Jan to December. So we Jan to December, okay, just for our viewers. And I think going forward, we want to grow slightly ahead of the market. Lubes category grows at about, let's say, 3 to 5% on an overall basis. Segments grow at different paces. So we want to grow a few points ahead of the market and then also protect our margins, because our EBITDA margin this quarter was at about 23%. And if we can improve our margins, that's our intent. So it's always will be a top line growth, managing our cost structures to make sure that we continue improving both top line and bottom line.
Right. And any guidance that you would like to give in terms of calendar year 23?
Normally, we don't share any guidance, but our effort is always to grow both top line and bottom line. And that's what our intent is.
Right. All right, Sandeep. Thank you so much for speaking to us at BQ Prime. Good luck for the coming quarters as well. Stay safe and speak to you soon again.
Thanks, Cyril. And thanks to you, and best wishes to all our listeners and viewers. Thank you.
Always a pleasure. Thank you.